Welcome back to Midcap Radar. The midcap end of the market continues to hold up very steady, 0.8% higher as far as the midcap index is concerned. The next corporate on our radar is Capital Small Finance Bank. Q1 was a good quarter for them with healthy growth in business momentum. Their asset quality has been stable while slippages have declined. To discuss more on the Q1 performance, Sarvjit Singh Samra, MD and CEO at the bank, joins us now. Good afternoon, sir. Thank you so much for joining us. First up, congrats on a good quarter. While the rest of the banking sector has been struggling to get deposits, both on a year-on-year as well as on a sequential basis, you have managed to increase your deposit base. Could you give us a sense whether this particular trend can continue going into the rest of FY25 as well? And what is the target that you have for advances?
Good afternoon, Vivek, and thank you for this connect. Actually, the growth in advances and deposits is very much in line with the bank's estimates. Normally, if we see Q1 with regard to advances, is normally a stable quarter, where if historically we have seen not much growth in that, and even a slightly decline if you dig into the previous Q1s of previous years. But for this year, the growth both for advances and deposit has been very healthy. We have made a disbursement of 754 crores in this Q1 itself, which is a 62% growth on year-to-year basis and a 12% growth on Q-on-Q. So we are very much aligned with our business guidance that we have given at the beginning of the year, that this year we'll grow our advances by 22 to 24%. And actually, if we slightly dig a bit back, like during the last two quarters, I'm saying the quarter Q1 and the last quarter of the last year, because we got listed in February 24. So after the listing, the growth capital was there. If we dig into that 14 crores of disbursement has happened after our listing, which is a growth of 12%. So I'm very confident that
and what is the deposit growth you're targeting? You spoke about the advances growth.
Actually, the thing is, we are a retail deposit franchise, and to fuel our advanced growth, we are very much aligned. So we take this call since there's a legroom available to increase our CD ratio. Levers are available in the balance sheet. So deposit has never been a problem for us. We are a retail franchise for last more than 24 years. So we'll be pushing our deposit growth to align and to fuel our advanced growth.
So when you say you'll be pushing it, Mr. Samra, YOY this time around the growth has been 10%. Do you think that is a number that will continue? Just trying to understand, because deposit is at the end of the day the raw material for loan growth as well, right? So what is the guidance you have here?
So absolutely, to fuel a growth of 22 to 24% of advanced target that is there for us during the year, we need a lesser, slightly lesser growth in deposits, and we are very much aligned with regard to for that deposit growth. And you would appreciate even in this Q1, even we have improved our CASA ratio as well.
Yeah. Right, sir. So before we move on, there's been a significant development as far as, regulator is concerned. RBI has come out with norms. These are draft norms, of course. As far as liquidity coverage ratio is concerned, prima facie, what will be the impact you will face on the back of, adhering to these norms?
Vivek, otherwise, of course, we have been pushing, mobile banking and all to our customers and all. Impact is going to be there on the industry if these guidelines are, implemented in toto. Still, they are draft guidelines. Industry is estimating something around, varying between 12 to 18%. But what estimate we have now, if the same guidelines remain, the estimate that we have is that it will impact us by 13 to 15%. But our LCR, you must have seen, is quite high. We are far above, above the prescribed limit. So it's not going to be a challenge for us, but impact is going to be there. Yeah.
Okay, so you have not been able to quantify the impact yet, but of course this is something which is
the impact will be around 13 to 15%.
13 to 15%. Okay. Last question before we let you go, Mr. Samra. You know, you do have around 68% of the total loan book coming in from rural and semi-urban areas. We've been talking about higher inflation, rural recovery, which is, of course, improving according to some industries, but just wanted your take on that. Is that something which is working well?
Yeah, it's working well for us, and the type of the customer segment that even we cater to in rural and semi-urban areas. We cater to middle income group segment. Even if we are in agri, we cater to middle income group farmers. We are not there in small and marginal, and we are not there for high net worth farmers as well, very big landlords. So the type of segment into which we are, say both in rural and semi-urban. Semi-urban, we are seeing a growth in small units, MSMEs, traders, where we are very much into that. Even for Q1, we have the focus has been more on MSME, where like MSME have contributed 25% of a growth in Q1, and similarly mortgages 25% and agri 22%, and the rest being others. Yeah.
Thank you so much for joining us. You know, we have to cut short our discussion today due to paucity of time. Thank you for joining us.